Stop what you were doing. What if I told you that a devastating, industry-wide supply chain crisis is actually acting as a massive cash printing machine for one specific company? Welcome to The Explainer. Today, we're diving deep into the wild market conditions surrounding Diodes Incorporated. By the end of this explainer, you're going to understand exactly how a crippling component drought is fueling absolute blowout financial growth.
Seriously, if your supply chain relies on Diodes components right now, you are officially in the danger zone. As of April 2026, wait times haven't just crept up, they have absolutely skyrocketed. We are talking about a staggering 52-plus week lead time. Yep, over a year. For anyone in procurement, you know a year-long wait isn't just some annoying delay. It is a critical, existential threat that will literally shut down your production lines.
And look, because supply is just incredibly tight right now, whoever holds the inventory holds all the cards. Diodes absolutely leverage this pricing power, rolling out an approximate 20% price hike across most of their product lines, practically overnight. Boom! Buyers were caught completely off guard, but honestly, what could they do? They had nowhere else to turn.
So, Section 1, Q1 Financial Blowout. Let's see how Diodes actually turned this industry-wide crisis into pure cash flow.
The financial leverage they've captured here is just massive. Diodes posted a 22.1% year-over-year revenue jump, hitting $405.5 million. But the sheer contrast in profitability, that is what's truly mind-blowing. Just a year ago, in Q1 2025, they were sitting on a net loss of 10 cents per share. Fast forward to today, they swung to a huge 32-cent gain. That's well over a 100% turnaround in earnings in just 12 months. So where is all this cash actually coming from? Breaking it down, we see a heavy reliance on three key sectors. You've got computing at 26%, industrial at 24%, and automotive right behind at 20%. In fact, if you combine automotive and industrial, that is 44% of their total product revenue right there. This specific mix drove much higher utilization at their fabrication plants, pushing gross margins up to a really healthy 31.8%.
To really wrap our heads around their operational success, we gotta look at EBITDA. That stands for earnings before interest, taxes, depreciation, and amortization. It sounds super technical, but it's a vital metric. Why? Because it strips away all the accounting choices and tax structures to show you a company's pure, unadulterated profit-generating engine.
Armed with that definition, it is just staggering to see Diodes' Q1 EBITDA hit $49.4 million. Think about that. It's nearly double where they were just a year ago, and this massive operational profitability supported a really strong free cash flow of $32.4 million for the quarter, and that's even while they were simultaneously dropping nearly $32 million on capital expenditures.
Moving into Section 2, Anatomy of a Shortage. Let's pivot to the physical world for a second and unpack the exact forces driving this insane squeeze.
Basically, we are looking at a perfect storm of two massive forces violently colliding. On one side, you have the AI boom. Hyperscalers are absolutely hoarding components. We're talking MOSFETs, timing ICs, silicon carbide diodes, all for these massive AI server buildouts. Then, on the flip side, starting in late 2025, a massive wave of displaced buyers fled the Nexperia's supply shortages and rushed to Diodes as a lifeline. These two huge forces collided head-on, pushing Diodes' manufacturing capacity right to its absolute breaking point.
Just look at how fast things unraveled here. We started with a very manageable, 8 to 9 week wait back in early 2025. Then, by the end of the year, that Nexperia overflow pushed wait times to over 24 weeks. And today, it has spiraled completely out of control to a crippling 48 to 52-plus week delay. That is literally a 6x increase in lead time in under 18 months. Absolutely wild.
Which brings us to Section 3, Industries feeling the pinch. So who is getting hit the hardest? Well, naturally, automotive manufacturers, high-compute server builders, and industrial automation firms are taking the absolute brunt of this. They are experiencing frequent, painful line-down situations as they desperately scramble for parts. Now, if you are a procurement manager or a supply chain director, you need to literally memorize this right now. Based on the absolute latest market intelligence, these specific component prefixes, your Zener diodes, logic ICs, MOSFETs, clock buffers, and bipolar transistors, are facing the absolute highest allocation risk in the open market today. Keep a very close eye on these.
So how do you actually survive this? Well, sitting still is definitely not an option. First up, buyers have got to immediately audit their bill of materials for any diodex exposure. Number 2, you have to secure open market buffer stock right now before it shrinks even further. And third, start working with independent distributors to evaluate high-quality alternative sources and cross-references. You've got to keep those lines moving no matter what.
All right, Section 4, the buyback and outlook, looking beyond 2026. Returning to the corporate side of the equation for a minute, Diodes expects to hit $435 million in Q2 revenue. Plus, they just announced a $100 million stock repurchase program authorized all the way through 2030. They are actively returning this newfound value directly to shareholders. Management is clearly highly confident in their trajectory here, projecting massive long-term growth. They plan to hit multi-billion-dollar revenue targets by ramping up utilization at their Scotland and South Portland wafer fabs over the next 2 years. They're basically turning today's massive supply crisis into long-term, sustained manufacturing scale.
But here's the thing. As AI demand shows absolutely no ceiling, and those next Bay Area orders just keep overflowing into Diodes' pipeline, it leaves us with one critical question to ponder. Just how much longer can the global open market actually endure these extreme hardware constraints and 52-week lead times before the broader supply chain simply snaps? It's a high-stakes situation that requires immediate action and constant monitoring. Thank you so much for joining me on this explainer, and I'll catch you next time.